Today on Crypto Win Rate, we're doing a complete beginner-friendly futures trading tutorial on KCEX. This tutorial is for educational purposes only and is not financial advice. If you want a deposit bonus and additional USDT prizes, I recommend you create a KCEX account with the link in the description. New users who register with our link will be eligible to receive these exclusive welcome bonuses. Before doing any trading, the first thing we want to do is make sure we deposited crypto into the right account. So on the top, let's head to Wallets and click on our estimated balance. Here we can see on the top right that all of my USDT is in my spot account. We want it in the futures account. So we're just going to head to transfer and then transfer from spot to futures. Click all and then transfer. And we can see that it was successful. And now we have our funds in our futures account. If you haven't deposited crypto yet, we also have a KCEX deposit tutorial linked in the description. Next, we want to understand the trading fees on KCEX. So we're just going to click the top left button. That will take us back to the home page. We're going to scroll all the way down to the bottom. Under services, click on fees. And here we can see under futures that the maker fee is 0% and the taker fee is 0.01%. A maker order adds liquidity to the order book, usually with a limit order, while a taker order fills against an existing order, which is what normally happens with a market order. Next, we want to head to the futures dashboard. So on the top, just click futures. Before we do any trading, we want to get our preferred layout. So we're going to head to the top right, click on settings. Here under general, we have a few things that can help us with our layout. We have theme setting, so we can keep it white or dark. Rise fall settings. So this will just make either green up or red up. And then we have layout settings. We have pro on right now, or there's a different layout, which is horizontal. You can also customize your dashboard. On each section, there are 3 little lines on the top right. If you click on them, you can then drag all the different sections to wherever you like. If you want to reset the layout, just head back to settings and click on reset layout. Under the reset layout, we can see there are different settings. We have trading settings, which has price protection and market order partial fill alert. Price protection can help prevent an order from filling too far from the expected price, while the market order partial fill alert warns you when only part of an order fills. You can also control confirmation pop-ups, notifications, and sounds. We also have more notification settings under notification and alert. We next want to choose a trading pair. For this tutorial, we are using BTC USDT. BTC is the asset whose price we are trading, and USDT is used for the position value, margin, profit, and loss. With futures trading, we are trading a perpetual contract that doesn't expire. We aren't exactly buying the asset Bitcoin to hold, we are trading a contract that follows Bitcoin's price. Again, I'm just using Bitcoin as an example for this tutorial, but this would be with any token that you choose. On the top bar here, we can see something that says funding rate and countdown. The funding rate is a small fee paid between traders to keep the futures price close to the spot price. If the rate is positive, long positions pay shorts, and if it's negative, shorts pay longs. So right now we can see that the funding rate is positive, so long positions would be paying shorts. The countdown shows you when the next funding payment happens. Most exchanges use 8-hour blocks. If you're holding a position when the timer hits 0, you'll either pay or receive that funding fee depending on if the rate is negative or positive. In the middle of the screen here, we have the trading view chart. The chart shows the price history of your token. The timeframes on the top left of the chart change how much activity each candle represents. Short timeframes like 1, 5, and 15 minutes show recent details, while hourly and daily charts make the larger trend easier to see. On the left side of the chart, we have drawing tools. These tools can be used to mark support, resistance, and possible entry or exit zones. Beside timeframes, clicking this FX button, this is indicators. Indicators can add tools such as a moving average or an RSI. Traders use indicators to identify trends, momentum, and possible entry or exit points. Beside indicators, we have the chart settings. You can use this to customize the appearance of your chart. While at the bottom, we have trading volume. This shows how much trading activity took place during each candle. On the top right of the chart, we have something called a multi-chart option. Multi-chart displays several charts at once. So let's say I want to look at 3 different charts. Traders may use the different charts to have the same token and look at different time frames of each token. So in this case, BTC, I could, let's say, have 15 minutes on this chart, 5 minutes on this chart, and 4 hours on this chart. Or we could use it to compare different tokens. So I could have BTC on this chart, ETH here, and let's say Sol on this chart. We're just going to keep our single chart on BTC for this tutorial. To the right of the chart, we have the order book. The order book shows current buy and sell orders. Green represents buy orders, while red represents sell orders. It helps traders see supply, demand, and liquidity, meaning how much buying and selling interest exists at each price. The gap between the buy and the sell price is the spread. A smaller spread usually makes it easier to trade close to the displayed price. Just to the right of the order book, we have market trades. Market trades show completed trades, including their price, the quantity of the order, and the time the trade was made. Now, when we're making a trade, we have two options. We can open a long or open a short. A long position is used when traders expect the price to rise, while a short is used when traders expect the price to fall. On the top of the dashboard, we can see two settings that say isolated and 2x. If we click on isolated, this is margin mode. Margin is the money in our futures wallet supporting our position. In isolated mode, a specific amount is assigned to the trade. If it goes badly, the risk is mainly limited to that position's margin unless you add more. Cross mode shares available margin across different positions. It can keep one trade open longer, but it places more of the futures balance at risk. For beginners, isolated margin is easier to understand and contain, so we will select isolated, and we can confirm this. Beside isolated, we have leverage. Leverage lets us control a position larger than the margin we provide. At 3x leverage, roughly $1 of margin controls about $3 of position value. That means every price movement has a larger effect on our margin. Higher leverage, though, also moves the liquidation price closer to the entry. Liquidation is when the exchange force closes the position because the remaining margin can't support it. KCEX offers much higher leverage, like 125x, but available doesn't mean advisable. We're going to stick with 3x leverage for this tutorial because it demonstrates leverage without taking the aggressive risk of a very high setting. So we're just going to confirm this. Now we're getting closer to creating our futures order. We next want to look at the order types. So up here we can see limit, market, and trailing stop. We're going to go over market order first. A market order opens immediately using the best available prices. Traders use it when execution matters more than choosing an exact entry. The final average price can differ slightly from the price shown, which is called slippage. And that's why KCEX has a slippage setting. Their slippage setting can limit how far execution moves from the expected price. A tighter tolerance adds price protection, but the order may not fully execute in a fast market. So that's just something that is good to know. Next, we're going to go over a limit order. A limit order lets you choose the exact execution price. Traders use it when they're willing to wait for a specific entry. It only fills if the market reaches that price and enough liquidity is available. So it may remain open or never fill. In a limit order, we can see something that is called BBO. BBO means best bidder offer. It quickly uses the best available order book quote as the limit price. But the order can still remain open if the market moves away. Next, beside limit, we have a trigger order. A trigger order waits for the market to reach a chosen price before KCEX submits the order. So we can see we have a trigger price, and then we have the option for limit or market order. Traders like to use a trigger order to enter a trade after a price breakout or when price reaches a planned zone. Under trigger order, there's also a few other orders. We have a trailing stop order. A trailing stop follows the market by a distance. On KCEX, this is called the trail variance. It adjusts as price moves favorably, then triggers if the market reverses by the selected percentage. An optional activation price delays the tracking until price reaches a chosen level. Traders would use a trailing stop to follow momentum or protect gains, but a trail that is too tight can trigger during normal volatility. Later in the tutorial, I'm going to show you how to create a trailing stop order. Under trailing stop, we then have advanced limit orders. We have a few different options for this. We have post only, IOC, FOK, or GTD. Post only keeps the order as a maker order. If it would fill immediately, KCEX cancels it. IOC, or immediate or cancel, fills what it can immediately and cancels the rest. FOK, fill or kill, requires the entire order to fill immediately or it all gets canceled, while GTD, good till date, stays open until it fills or reaches the selected cancellation date. These are all useful execution rules, but most beginners don't need them. Just start with a normal market or a limit order first. For this tutorial, we are going to execute a market order, as the order will fill right away while we are recording. We are going to place a 3x market long on BTC with our full balance. We can see there's something that says quantity USDT. If we click on this, these are the futures unit settings. KCEX's unit settings let us place an order by quantity or by cost. Quantity can use BTC or USDT, while placing an order by cost focuses on the amount required to open the position, including applicable fees. For beginners, cost in USDT is easier because it keeps the amount tied to a clear dollar value. This is what we will use today, so we can just confirm this. And we're just going to move this again to the far right and use our full balance. We can see with our 3x long, we'll be exposed to about 600 USDT worth of Bitcoin. Now, before we execute our order, we can see there is a box that says TPSL. This stands for take profit or stop loss. We are going to click on this. A take profit closes the covered amount when the market reaches a profitable target, helping you lock in gains automatically, while stop loss closes it when the market moves against the trade, helping you prevent a manageable loss from becoming much larger. Traders use both to create an exit plan before entering and reduce emotional decisions. They also protect the trade without requiring someone to watch the chart constantly. These orders can't guarantee the exact closing price during a fast move, but beginners should still plan a stop loss and profit target before entering a leverage position. So that's what we're going to do right now. On KCEX, there are a couple different ways to set our take profit and stop loss. There is by ROI. The ROI percentage measures the return of your total investment. We have the easier option in my opinion, which is trigger price. If we have a trigger price in mind, we want to exit our position at, let's say I'll be happy when Bitcoin hits 100,000. We can do this. And then on the downside, maybe about 40,000 to cut our losses. There's also advanced options. We can set our take profit and stop loss by ROE. This measures the return percentage on the margin you use to open a leverage position. So this includes our 3x leverage. So let's say I'll be happy with a 50% gain. That would take Bitcoin to about 75,515. On the downside, I don't want to lose more than 30% of my initial position. And we can see Bitcoin's price would be at about 58,000. We can also set our take profit and stop loss by price change. This is just the percentage change of the asset from when you entered the trade. So right now, Bitcoin's at 64,766. I'll be happy if it goes up 40%. We can see what price that takes us to. And on the downside, it's the same thing. If it's down 20%, it will take us to about 52,000. Lastly, we can set it by P&L. This is your profit on your margin. So we can see if Bitcoin was at 100,000, we would be up about $324. This again has to do with our 3x leverage. On the downside, let's say you don't want to lose more than $100 on your trade. That means we would be sold out of our position at around 54,000 BTC. I just wanted to show you all the different options, but we are just going to keep things simple and use trigger price, and we're going to set our take profit at 100,000 and our stop loss price around 50,000. We can now open our long, quickly look at the details of our trade, and then we can confirm it. We can see that our order was filled. If we would scroll down a little bit, we can see our position under open positions. Here's where we can manage our position. If we click under margin, this is where we can add or reduce our position. We also have options like close that let us choose how much of a position we want to close, or close all, which would close all of our open positions all at once. If we wanted to check out our take profit and stop loss order, we would just head to open order. Here we can see there are different sections, and under TPNSL, here is our order. This is where we can edit our take profit and stop loss order or cancel it. I'm now going to show you how to add a take profit and stop loss to your existing position. So we're going to head back to open position, and we're just going to scroll a bit to the right. And here we can see under TPNSL, it says add. Click on this, and this is where we can now add a take profit and stop loss. We again can decide how we want to set our take profit and stop loss. This time we are going to set it by change percentage. I'll be happy to exit my position if Bitcoin goes up 50%. And on the downside, I want to protect my position if Bitcoin goes down 30%. And we can confirm these orders. Just a quick note, when I was editing the footage, I realized I forgot to change the stop loss from P&L to change percentage. So that was supposed to be 30%. The stop loss should have been set around 45,000. Now under take profit and stop loss, we can see the orders. This is where we can edit the orders. Or if we click on these recycling bins and confirm, it cancels them. Next, I'm going to show you how to add multiple take profit and stop losses to your existing position. Again, we're going to click on add under take profit and stop loss, but instead of our full position, we're going to click on batch. Using batch allows us to choose how much of our margin we want to include in our take profit and stop loss order. So instead of our full position, I can create take profit and stop loss orders on just $250 worth of our position. For a take profit, setting multiple or batch orders lets you secure some profit at an earlier target while keeping part of the position open for a potentially larger move. For stop losses, this can reduce part of your position at one price and close the remaining amount if the market continues moving against you. This gives traders more flexibility when managing risk and profits. So for this demonstration, we're going to set two different take profit and stop loss batch orders. So for our first batch order, we're going to sell about 40% of our position. And I want to do this once Bitcoin is up 60%. And on the downside, switch this to change. I want to exit about 40% of our position if Bitcoin goes down 15%. And we're going to confirm these orders. We can now click on batch and we can see both of these orders. We can now add a second order, and this order is going to be the rest of our position. I'm going to let the trade run. So I don't want to be fully out of my position unless Bitcoin is up 100%. And on the downside, if Bitcoin goes past about 45,000, I don't want to stay around for much longer and I'm going to exit my position, and we can confirm this. We can now see both of our batch orders. We can edit or cancel them here as well. If we wanted to cancel the orders, we can just click on cancel all. The last type of order I want to show you how to do is a trailing stop order. So under trigger, click on trailing stop. The trailing stop order is a close order. So we're going to switch that. And for the quantity, we want the trailing stop order to close our entire position. Now, as we said before, a trailing stop order can manage a position as the market moves. There are two parts to the trailing stop: trail variance and activation price. Let's say we would set the trail variance to 10% and our activation price at 90,000 BTC. Once Bitcoin hits the 90,000 activation price, the trailing stop becomes active. With a 10% trail variance, the stop follows Bitcoin as it rises. If Bitcoin reaches 100,000 and then falls 10% to 90,000, the trailing stop triggers. If Bitcoin rises to 110,000 first, it would trigger after a 10% drop to 99,000. So we're going to go ahead and close our long and confirm the order. Now to see our trailing stop order, we can just go to open orders, and then under trailing stop, we can see it. Here's where we can edit our trailing stop. We can change the trail variance, the size of our order, and the activation price, and we can also cancel it. If we want a visual representation to see how our trade is doing, we can just look on the chart. We can see where we entered the order and the current price and how much we are down right now. So right now we're down about $2.65. If we wanted to close our trade, we can close it with a market or a limit order in the order panel, or we can scroll down to open positions and then click close. Here we can decide how much we want to close. We can choose the price, so it would be a limit order, or if we just click on market, it would give us the best price. We can click confirm, and we can see that our order was closed successfully. If we want to see how our trade did, we can check out position history. Here we can see we lost about $2.75 on that trade. And that about wraps up our KCEX futures trading tutorial. Remember to take your time, start small, and always manage your risk. If you want a deposit bonus and additional USDT prizes when signing up to KCEX, you should create an account with the link below this video. The link will take you to this sign up page where you can see all the bonuses you are eligible for. If you like this video, feel free to give it a thumbs up and subscribe to our channel. We also have a website at cryptowinrate.com with plenty of crypto content and tons of educational guides for you to sift through. Thanks for watching, and we'll see you in the next video.